Right, you managed to solve one of the big riddles for the rest of the year with your focus. You're going to tell us how equity indices are going to perform over the next 3 months, which is a brave thing to do, I think.
Well, I'm not sure I'm going to tell you. I'm going to pose a few questions. So,
right.
So yes, how will equity indices perform in the last quarter of 2015? So the majority of global equity indices are now underwater on a year-to-date basis. It might surprise people to note that Italy's MIB is actually the best performer out of this list of global equity indices, whilst Canada TSX index has actually been the worst performer, and you'll see Brazil following closely behind there. Yeah, I think the actual gain, in the MIBs quite impressive, north of 10% year to date. So I guess that tells you what you need to know about the 2 or 3 speed Europe and where people think the recovery is likely to come fastest and earliest.
So they decided that Italy was the best way of playing a QE, for instance.
I think so, yeah.
Or new QE.
Yeah, absolutely, yeah. Country most likely to benefit. Obviously, Spain's.
Or maybe they're just happy that Berlusconi's gone. It
could be both. A new broom, and they've got a massive bond market, the Italians, after all. So it's only natural, I suppose, that they should benefit from quantitative easing. The question, of course, on most people's lips will be: will we see a centre rally, a bounce back in the run-up to Christmas? And for myself, I'm not so sure. Contrarians will be wondering whether commodity-related indices such as Brazil, Australia, and the FTSE will recover. And I suppose if you're a long-term contrarian, you may be thinking about putting some money into 1 or 2 of those indices. For the States, it's really going to be all about Q3 earnings, which kick off next week with Alcoa reporting on the 8th of October after hours. So the question then is, will Q3 earnings push US equities back to gains for the year? Analysts have been pretty bearish about the prospects for Q3 earnings, which could go one of 2 ways. They could be proven to be right, or they could, as ever, sort of have massively clubbed it, and then see a few exciting beats which could drive things higher.
Yeah, so probably the latter scenario is the one that we're going to be looking for.
Yes, absolutely. But I think more than ever in this earnings quarter, it's going to be about guidance going forward, and what people, what US corporates are saying about how they anticipate trading in 2016 to go. So it should be a very interesting run into Christmas, that's for certain.